The last video guided you through updating the income statement information and the balance sheet information on our financial statement template that will be completed and uploaded to Blackboard as part of this assignment. Now we're going to go through the ratios. You'll notice on top I've written, use formulas in your ratio calculations, link the information in the cells here to the data that we have in the income statement and balance sheet. You'll see that my template, my example for Target and Walmart has these numbers hard-coded, not formulas. This is so that you'll have to calculate the formulas yourself. What we have here are a list of 9 commonly used financial ratios. 6 relate to profitability, and 3 relate to how efficient the firms are with the assets that they've invested in. To start with gross profit margin, I want Excel to calculate a formula, so I start with the equal sign. Gross profit margin is equal to gross profit divided by sales revenue. So I know that both pieces of information come from the income statement. So I click on the income statement tab, and I want my gross profit for the most recent year divided by the sales revenue. I hit enter, and there's my gross profit margin. In order to update this information for the 2 years prior to the most recent year, I simply drag over my cursor once we see it in a black plus sign. Now I have updated my gross profit margin. For the operating profit margin, I'm going to say I want a formula, use the equal sign, equals operating income as a percentage of sales revenue. Again, I drag that information over. Net profit margin, net income as a percentage of sales revenue. I should always see that the numbers are getting smaller when coming from my gross profit margin down to my net profit margin, because each one of these, each successive ratio includes more expenses and therefore lower profits. Now you'll see with return on assets, it's defined as net income over average total assets. On the balance sheet, you may have noticed that below our liabilities plus stockholders' equity, I've given you a space to put in average balances. The reason for this is because we're comparing net income, which covers an entire year, to assets, which on the balance sheet will be as of one particular date. And for example, this 41,290 in the most recent year for Target. That's what the company had on February 2nd, the very last day of the year. To get a better picture of what the company held in assets over the course of the year, we take this year's plus last year's and divide by 2 to get an average. I've done those calculations down here. Alternatively, I don't have to have that. I could just simply take my net income and then divide that by, and then I can calculate the average as the denominator if I like. So I could solve for my ROA that way, or I can simply take net income divided by where I've calculated my average total assets. Again, I'm going to drag this formula over to get the numbers for the prior years. I'm going to skip over return on common stockholders' equity. That'll be calculated the same way. Notice that earnings per share we don't have to calculate it. We'll be given it on the income statement. And this is our only ratio that's a dollar amount and not just a number. These are all percentages. If you'd rather change the format to be percentages, that's fine. Either way is fine with me. We're going to continue down, update our accounts receivable turnover, inventory turnover, and asset turnover. If your company did not report accounts receivable separately from its current assets, we can simply write an A. If their company did not report its inventory as a separate component of its current assets, we can, of course, write an A. If you're curious about how checking the validity and the reliability of these numbers, there are 2 things you can do. One, you can check your company's financial ratios to those published online. Morningstar is a great resource. That lists financial ratios I'm going to click on the Financials tab here. I see lots of the financial information, but I have not yet gotten my, let's try operating performance. Okay, I paused the video and did another search for key financial ratios for Target on Morningstar. And now here I have some profitability ratios. I see my gross profit margins here. They have the most recent down here, so I should be able to tie this 29.27, 29 if I took my 0.27. So I know that my numbers are correct. If I want to compare these numbers to industry averages, I might also do a search. Financial ratios, industry averages, or industry benchmarks, and look through some of what comes up and try to find. Most of the companies that I assigned are in retail industries or restaurant industries, so I might want to look for those types of industries, see what the various ratios are for the industry as a whole, and compare them. I don't need to do that just yet. That would give some credibility to my numbers here. It's assignment number 2 that's going to ask you to discuss those ratios, and that will be due later on in the semester. I hope you found this video helpful, and please let me know if you have any questions.